Hi, everybody. Welcome to today's webinar with First Nonprofit on mastering unemployment, remote employee, and HR compliance. We are thrilled to partner with First Nonprofit. I'm Wendy Himes, Director of Membership and Conferences with Vision Serve Alliance. And this is one of those member benefits that we just wish everybody knew more about because it's so valuable. So we've partnered with First Nonprofit for, I think, over 12 years. Correct me if I'm wrong, Cruz. And they are providing Vision Serve Alliance members several safe alternative unemployment insurance programs, something which fits everyone's needs. So today you'll hear how they go above and beyond to provide professional advice for all your HR and employment issues. So today's presenters, just to quickly introduce our two presenters from First Nonprofit, are Cheryl Jones and Cruz Mendez. So Cheryl, Vice President with First Nonprofit, she's an accomplished leader in the nonprofit community with over 25 years experience of working directly with nonprofits with an ability to open doors, make sales, and create long-term relationships. Cheryl has served on the boards of the Colorado and Minnesota Nonprofit Association's insurance agency boards and is a licensed life and health insurance agent. Cruz Mendez is the marketing director at First Nonprofit, where she has played a pivotal role for over 20 years. She's passionate about supporting the nonprofit sector. Cruz is also dedicated to educating organizations on unemployment risk and HR management solutions, ensuring that you will find cost-effective options so you can stay focused on your mission. I will turn it over to Cruz and Cheryl. We have put the accessible version of today's PowerPoint in the chat, so you should be able to download that. And of course, the slides will be sent out as well as the video recording to today's presentation after the webinar. If you have questions, you can go ahead and enter those in the Q&A, and we will either get to those as they come up or at the end of today's presentation. All right, now I'll turn it over to you, ladies.
Thanks, Wendy. This is Cheryl speaking. I'll give you a description of myself so that you know what I look like. I am a white Caucasian woman with curly hair. I have glasses and I'm wearing a blue shirt, and I want to thank you all for joining us this afternoon. I'm going to move on and cover the next slide. So with that, I'll give you a little background on First Nonprofit. We are based out of Chicago, Illinois. We are a national leader in the industry providing unemployment funding options and savings program for nonprofits. And I'll describe the slide that I'm looking at right now. We have working right now with 2,300 nonprofit customers nationwide. We cover and work with $21 billion in managed payroll with those 2,300 nonprofits. And last year, we were able to save $100 million in claim savings for those nonprofits. And we were able to give back $24.5 million in experience credits to those organizations that we were working with. And within those 2,300 nonprofits, we work with over 710,000 employees in those organizations. So that's a lot of employees that we're looking at nationwide. And on average, when an organization begins working with First Nonprofit, we're able to save them 30% over what they were paying in their unemployment costs. So that's not just a little bit of money, that's an average of 30% savings when you're looking at one of the programs with First Nonprofits that we're going to explore a little bit deeper when we go into the other slides. We're working with over 40 national and state nonprofit partners like Vision Serve Alliance. So we're very proud of the organizations that we work with nationwide. And we're now celebrating 30 years of working with nonprofits across the country. So we have quite a history of working with you all and working with nonprofits. So visually, here's a slide of all of the nonprofit associations that we work with across the country. You can take a look at working with people like Vision Serve Alliance, working with the Pennsylvania Association of Nonprofits, working with North Dakota nonprofits. We have quite a footprint across the country. Our guiding principles as we look at what we do: First and foremost, we're looking to help you save money so that you can put that money back into the mission and back into the communities that you work with. We want to help you protect nonprofits from unexpected expenses. And we want to complement what we do by providing you some human resource tools and be able to help you work with processes and procedures within your organizations that give you the tools to give your employees training, some classes, some courses, help you stay compliant within your organization. And we have a relentless focus and obsession on delivering for our clients so that you can deliver on your mission. And with that, I'm going to turn it over to my colleague Cruz, and she's going to give you some updates on some pending legislation, and then we'll go in a little bit further.
Thank you, Cheryl. This is Cruz speaking. I am a Mexican woman with long brown hair. And one of the tools that I am most proud of providing to our prospective members are the cost factors and pending legislation, as well as other considerations like remote employee compliance that should be kept in mind when evaluating unemployment. And if we go over to the next slide, Cheryl, I will go over the first consideration. And Helen, if you could please share the poll of how you're currently funding your unemployment. So there are two main funding methods, one being the state unemployment tax paying method, in which you would pay unemployment taxes on the wages that you are reporting to your state's unemployment agency. So that would be the first method. And the second would be reimbursing or self-insuring for that cost. And that means you pay the state back dollar for dollar or only when someone files for unemployment. The third would be another program like First Nonprofit, where perhaps you're taking advantage of the self-insurance method, but you're looking for insurance. And then our last option on here would be to mark unsure if you're not sure how you're currently funding that cost. And if you can select that, and Helen, if you could share the results with us in a few minutes.
Sure, we're waiting on a couple more responses. And it looks like most people are paying state unemployment insurance.
Okay, thank you.
Mhm.
All right, so that is the most common method of unemployment payment today. If we go to the next slide, Cheryl, I am going to be going over the pros and cons of each method. So if you are currently paying the state unemployment tax, the pros of that would be that you have a fixed annual cost. If, for example, your rate is 1% for the year, that is what your payment is going to be. You're locked in that at that rate. There's no risk beyond that rate. The negatives or the cons to paying the tax is that your rate is tied into the solvency level of your state unemployment fund. So if your fund is low, chances are that your costs will increase in order to replenish those funds the following year. So there's a pooling of costs that happens with the state unemployment fund, and your costs can increase even if your experience improves. So if your organization hasn't had a claim, in years, but the state as a whole is seeing an increase in unemployment claims, you will likely see an increase in that cost, even if your organization has never had a claim. There is a strain on cash flow as the majority of taxes are paid in the first and second quarter of the year. So that's when you're making your most payments. So there's not an equal distribution of payments throughout the year. The pros to self-insuring or reimbursing, self-reimbursing is that, of course, it is at a lower cost. You're only paying the state back dollar for dollar when someone collects unemployment. You're not paying the additional tax on top. So you are your activity or your cost isn't affected by the solvency standard or the solvency level of that unemployment fund in your state. The cons to self-insuring or reimbursing are that you are not limited as an employer to how many claims you can collect or how many claims can be collected from your account. There is a maximum that an employee can collect. However, like let's say you were to let go of 10 people, you know, you are responsible for paying back the state back dollar for all those 10 people. You're not locked in at a rate like you would be if you were tax paying. So this, of course, could lead to the inability to accurately budget for this cost. If you don't see an unforeseen, if you experience an unforeseen closing in a program, for example, it's hard to budget that cost. So there is an exposure to severe fluctuations of unemployment claim costs. In some states, there is a loss of certain protest rights. And if you are not auditing, you know, how much is being collected in claims by your former employees, you are exposing yourself to overpayments. So if we go over to the next slide, we will go over how much can a claimant collect on unemployment. This chart lists all the average cost by state. If we go over to the next slide, Cheryl, I'm going to focus particularly on the state of Pennsylvania, as I know that we did have some VSA members join us today from that state. If you are a tax paying or if you are a reimbursing employer, you are getting monthly notifications on how much is being collected in unemployment by your former employees. On average, the weekly claim amount in the state of Pennsylvania is $482.31. And the average duration, so how long they are collecting, is about 14.15 weeks. So the average claim value, if you multiply those two, is $6,824.64. So that is what the average claim right now is for someone collecting unemployment in Pennsylvania. If we go over to the next slide, we'll go over to overpayments by state. And I'm going to be focusing on the state of Kentucky. Cheryl, if you hit next, you can see that we highlighted the overpayment rate in that state is actually 34.274%. So 34% of claims are usually overpaid in this state. And that claim value, or I'm sorry, that is wrong on this slide, but the total cost of those overpayments in Kentucky is $41,242,359. So these overpayment claims, that is how much the state is paying in overpayments.
So I'm going to talk a little bit about that. If I just bump back to that, if you look at overpayments by state, and it's a big slide. I mean, these are interesting slides that Cruz just showed. And if you have time and once you get the slideshow emailed to you, you can take a look at your state in particular. And you see the differences state by state of, you know, how things are different by every single state and how things are different. If you look at Kentucky, 34% of every unemployment claim that was paid out in Kentucky was paid out in error. You know, overpayment means they paid that out in error. So that's, you know, a big difference. And that means as an employer, 34% of all the claims that were paid out in error. And the only way to get that money back is ask the claimant to actually give that money back. So think about that. Think about you as the unemployed person getting a check and it was paid out in error, and now the state is asking you to send that money back. Well, that takes a while. If in fact you ever get it back, it has to come back to the employer. And oftentimes you don't get it back until at some point Cheryl Jones files for unemployment again, and the state says, well, you know, the last time you filed for unemployment, we overpaid you, so we're not going to pay you again until the amount that you're owed is, you know, deducted from what you're getting paid this time. So that's how they collect overpaid claims, is by not paying you the next time you get paid out. So think about that. You know, I've thank goodness, not ever been unemployed. But, you know, given the fact that they overpaid, they would have to wait until I was unemployed again to get me to pay back that money. So overpayments are very serious. And then, you know, you look at the state of Washington, it's $164 million paid out in overpayment. So this adds up into astronomical amounts of money that were overpaid. So it is a big deal when you think about that. So state unemployment funding, I want to talk a little bit about that. And the historic number of unemployment claims filed as a result of the pandemic really did stir up a cauldron of issues in both the state and federal governments relating to the payment of unemployment claims. So as a result of that, there were multiple task force that were put together to come up with recommendation to help resolve issues around, you know, broken systems, around, you know, states paying out overpayments, state paying out fraudulent claims, putting together their recommendations. So there's no doubt that change is coming to the unemployment system, and it's going to impact you as employers and how you're paying unemployment and what's going to happen next. So I just want to talk a little bit about that, just so that you're prepared for it and what's going to happen, and just give you some background on that. You know, unemployment is a critical program to the overall economy, and it's really social insurance that's there, and it's meant to cover employees who lose their job through no fault of their own. It's meant to replace a portion of lost income. So that's why unemployment started, and it's there, and it's never going to go away. Hopefully it's never going to go away. It's there because if you lose your job through no fault of your own, it's meant to cover you for a period of time until you can find reemployment. But what's happened is a lot of states, and when it was created so that you would have that social safety net for 26 weeks. So that's what initially said, that if you lost your job, you would get paid unemployment for 26 weeks so that you would have time to find a new job. Well, what's happened now is, because unemployment is run by each state gets to determine how much you can collect for unemployment and for how long you can collect it. So now what's happened is a lot of states say, well, we don't think 26 weeks, we don't think we need to pay for 26 weeks anymore. We think we can pay for 12 weeks, or we think we can pay for 9 weeks. So now there's a disparity from state to state on how much somebody can collect. I live in North Carolina. If I get laid off, I can only collect for 12 weeks. If I live in Chicago or Illinois, where Cruz lives, Cruz can collect for 26 weeks. So there's a big difference. I live in North Carolina. The maximum amount of unemployment I can collect is $300 a week. If I live in Massachusetts, I can collect $900 or $1,100 a week. So there's a huge difference. If I get laid off, I sure hope I live in Massachusetts so I can collect $900 a week versus $300 a week, so that I have time to find a job. So what these task forces are saying is that the COVID pandemic really exposed major cracks in the UI system, including one, massive technology failures, because there was like a core administrative infrastructure system that, you know, states could not process the paperwork fast enough to pay people out what they needed to pay them out in time so that people got their money. And then second, they couldn't detect fraud. They just could not detect fraud fast enough. So what happened is, you know, all of these fraudsters who had been sitting on the sideline with all of this personal data that they didn't know what to use with, that had been collecting this for all this time, now suddenly had this open door where they were able to say, look, here's this perfect opportunity that we can use all of this information. And they were able to go in and file thousands and thousands of, you know, opportunity to file fraudulent claims. So during COVID, there were, you know, 53 million workers receiving unemployment benefits worth $880 billion over the course of the pandemic. And, the poor, workers in all of the states trying to pay out these unemployment claims were trying to pay them out as fast as they could. And they weren't able to detect the fraud. And on top of that, the federal government was saying, we're going to overlay it with extra COVID benefits on top of it. So there was so much going after them at all this time that these task force just said, whoa, we got to fix this system. So now comes what's next for employers, and here's the changes that are coming. And the task force said there needs to be more to state and federal collaboration in place so that there's similarity among systems. So they want states to have more robust systems to protect against fraud, and they want states to go back to have the same duration of weeks payable. So they don't really want states to have 12 weeks here, 6 weeks here, 9 weeks here. They really do want states to go back to have consistency of weekly benefits. And they don't want the federal government to have to step in every time for extended benefits. So what they want is, if something happens, they want states to cover the length of extended benefits longer. So what they're saying, as employers, you need to be prepared in the event that there's another emergency, that you're responsible for covering the extended benefits of emergencies for a longer period of time, or we want the states to cover those extended benefits for a longer period of time, rather than the federal government always having to come in and cover those benefits for a longer period. So what they're saying is, states, you need to get your acts together sooner so that the federal government doesn't have to keep stepping in and covering all these emergencies. So with that, I'm going to let Cruz step back in and talk about some specifics of what's going on and what employers need to be prepared for.
Thanks, Cheryl. So one of the federal pending legislations that they are reviewing is the Wyden-Bennett plan that they are looking to take effect on January 1st, 2025. But this really gives you an idea of what they are looking at the federal level, and in some cases, even at your state's unemployment agency, what changes could be coming down the pipe here. So as Cheryl mentioned, there is a difference in how long a person can collect unemployment. This legislation would mandate the 26-week period. Some states that have less than 26 weeks, as Cheryl mentioned, North Carolina does, as well as Kentucky, Florida, Missouri, and Oklahoma. They have maximum weekly or maximum collection of benefits at lower than 26 weeks. So this would mandate the full 26 weeks across all states. They are also looking at different ways to calculate weekly benefit amounts. At this point, every state has their own way to calculate those unemployment weekly benefit amounts. One would be 75% of claimants' highest quarterly earnings, or they would look at the state weekly benefit amount being equal to 67% of the state average weekly wage. And in this slide, I highlighted how that mandate would change the weekly benefit amount maximum in Texas. Currently, you can collect up to $577 per week in that state. This would make it so that you could collect up to a maximum of $914. So you're looking at a 58% increase in weekly benefit amounts. Additionally, they are looking at dependent allowances or dependent unemployment benefits. Some states already offer this, like I believe the state of Ohio does. However, this would make it so that the cost of this dependent allowance at $25 would be funded by the federal government. Additionally, they are looking at modifying the base period term that is used to calculate claimants' benefits. Currently, they look at the first of the last 5 completed quarters. This would change it to basing the calculation on the 4 most recent completed quarters instead. And lastly, they are looking at the elimination of the waiting week. Currently, if you file for unemployment, you have to wait a week in order to start receiving those claims. This would be completely eliminate that. So this just gives you an idea of some of the federal legislation that they're looking at, but we are, again, we are seeing this type of legislation being proposed at the state level as well. And if we go over to,
And
did
all
you
of that
add-
would drive up employers' costs, right, Cruz?
Yes, so it's basically all cost increases,
Yeah.
right, that we're seeing. Other issues impacting employers is remote employee compliance. As you all know, during COVID, there was a shift to remote work. And post-COVID, we saw a boom in non-compliance issues. So again, I'm going to use this example of Kentucky. If you look at, we're providing a map on this slide. Kentucky borders 7 states. So it's quite easy for someone that lives in Kentucky, right, to move over across state lines and maybe not notify the employer that they've moved. And in that situation, you do actually have to file or register for an unemployment account when an employee does that. So if a person moves from Kentucky to Indiana, they have to look up Indiana's registration information, apply for an unemployment account, and then start reporting wages to Indiana. Every state has its own liability thresholds, of course. Some states require 4 employees, but most states do allow for the voluntary registration of an unemployment account. So non-compliance could lead, of course, to the loss of an employee being eligible for unemployment. In that situation, let's say that Illinois employee goes to file for unemployment, but an unemployment account was never open in Illinois, they would be denied for unemployment claims. And of course, there's penalties for the employer for non-compliance. Additionally, another issue impacting employers is the change is in minimum wages. Take, for example, Florida, they are going to be increasing their minimum wage by $1 every September 30th until reaching $15 on September 30th, 2026. So we're seeing a lot of wage minimum increases, usually being updated in July or September. So that's another consideration to keep in mind. Also, Medicaid unwinding is happening and leading to several layoffs, especially impacting federally qualified health centers. 1 in every 10 federally qualified health centers are being impacted by this. And we're also seeing this in other nonprofits working in the health sector. And these kinds of impacts would, I'm sorry, these kinds of layoffs would eventually trickle down to other nonprofits. And we're seeing layoffs averaging 5 to 8% of the workforce by these impacted organizations. And one thing to keep in mind with these, what we call like mass layoffs or program closures is some states do provide short-term compensation or work share programs in states where you don't have to, lay off 30 people. Instead, what you would do is decrease by a percentage the wages of a department or of a group of employees. Those employees would then be able to collect unemployment to make up the difference in the salaries. But the main thing is that you're not going to be laying off or closing a program. You could still keep the program going. And again, those are called work share programs, which we here at First Nonprofit would be able to help you all set up if needed, as well as, work remote employee compliance as well, something that we would help you all comply with. And lastly, pandemic funding is just about over, leaving several nonprofits looking for new ways to bring in revenue and prevent layoffs. So I think with that, I will hand it off to Cheryl to go over the programs that would help with a lot of these issues and cost factors.
Great. So I'm going to cover the different FNP programs, the First Nonprofit programs that we have, and then we'll just quickly go through those. So we have a program that fits every need of nonprofits. So the first one is the bonded service program, which is first and last dollar coverage. So if you want to be what we call, if you think about this like insurance, if you're looking at your health insurance program that you get every year, if you want first and last dollar coverage, if you want to be fully insured so that you have no out of pocket deductible, the bonded service is going to be first and last dollar coverage. So you go into this knowing exactly what you're going to be covered at the end of the year. If you didn't, if you don't need it, we're going to be able to give you some of that return on premium. We don't call it, it's not insurance, but we able to give you back an experience credit on that bonded service program, but you don't have to worry about coming up with any extra funds on the bonded service program. So that's that program. The unemployment savings program, you establish a reserve account. You put money in there. That money belongs to you. It has the interest income. If there's unemployment claims, we pay the unemployment claims out of that reserve account. So you set up, we take a look at what your average annual claims are. We decide how to establish a reserve. You make deposits into that account in 4 equal payments throughout the year. It's the same under the bonded service program. You make those payments in 4 payments each quarter out throughout the year. When you're in the state's unemployment program, the most of your payments come in the first and second calendar quarter because they base it on your wages. The excess loss insurance program is for larger self-insured programs. That's for that. And then we have a new program, which is our FNP Access program that we just launched this year. It's really a great program. It provides the claims monitoring and the HR-based platform, which is our mineral program for clients that either want to self-insure and manage their own reserves, or for organizations that still want to stay in the state unemployment tax system for whatever reason. Maybe you're sitting at the very high end of the unemployment tax system and it just makes sense for you to stay in the state tax system, or maybe you have 2 or 3 employees. I don't know if any of the VSA folks have that little tiny amount of employees, but for whatever reason, it makes sense for you to stay in the state unemployment tax system. You can still have access to all of the services of First Nonprofit and still stay in the state unemployment tax system. So it's a great program, and we'll talk a little bit more about the services of the FNP Access Plus program for anybody. And what I'm going to talk to you about next is you get all of the services that I'm going to talk to next in any of our programs, whether it's the bonded service program, the unemployment savings program, or anything else. And the good news is you fill out, your request for quote form with us, we'll help you decide which program makes sense for you. You might think that maybe the unemployment savings program is best for you, but once we work with you and do an analysis for you, we might say, you know what, the bonded service program is best for you. So while we work with you and we talk you through all of this, we'll let you know and we'll decide with you which one is the best for you as you look at the alternatives. But the bottom line is, looking what's coming down the pipe and what's happening at the state program, everybody's going to get a rate increase regardless, because if the state's increasing their taxable wage base, you're automatically going to get a rate increase from the state, regardless of whether or not you've had claims. So it never hurts for you to do just a check with us just to see what your savings would be. So there's no cost for us to do an analysis in our programs. It's just a good, you do a quote with your health insurance, you do a quote with your auto insurance, you do a quote everywhere. We can just do a quote for you just to give you an idea. So just a sweet, like we say with all of our programs, everybody wears too many hats this day and age. We're all running around, we're all looking at everything else. So what we want to do is we want to help you take a look at everything that we do and see whether or not we can help you. Whoops, I moved a little bit too fast on that one. but just give you an idea of the services that we offer. We have an HR program. It's a platform where we offer, hundreds of courses that you can offer out to training to your staff. So it helps you cut your training budget because the courses that we offer are all part of what we have within there. There's no additional cost. We offer compliance, so it helps you with your handbook, keeps you compliant with your handbook. We can do an analysis each year to let you know whether or not you're budgeting properly under your unemployment. And then we offer all of the claim services from our claims monitor to keep you compliant with your unemployment claims. So I'll talk a little bit about each of those in the next few slides so that you have that in there. So this is a slide of what we offer with our unemployment claim services. So right now, if you're in the state unemployment system and a claim is filed, you have to react to that fairly quickly. So you have 10 days from the day that a claim is filed to either protest that claim and get that claim charge removed, or if you don't protest it, it's automatically paid by the state. So we want to make sure, if in fact that you have let somebody go for good cause and you want to protest that claim, that we're able to do that. So when we see a claim, we will contact you because we get notice of that claim right away. We want to work with you so that claim is either filed correctly and that claim gets paid because maybe you had to lay somebody off and that claim is going to get paid. Or if you want to protest that claim, we're going to protest that claim with you. It's our job to make sure that when a claim is filed, that it's filed correctly and it's filed accurately. So we become the address of record with you and we work with you to file those claims. So you have access into a system through Equifax, who's our claims monitor, so that we look at those claims and you look at those claims. So we process those separations, we review, we go to those claims hearings with you, and then we work through all of that. And then you have access into the system 24 hours a day, 7 days a week, so that you can take a look at all of that. And again, there's claims training. We can train your newly hired supervisors on how to do stuff, and we can work with you through all of the claim systems. You have push button reports so that you can audit and provide reports into management and do what you need to do. We do educational workshops, and all of that is part of what we offer you as part of the services when it comes to managing any unemployment claims and doing things with that. This is just a slide of some of the comments that we get when folks work with our claims folks. Dennis was great to work with, very thorough and knowledgeable on the process and prepared well for the hearing. Jennifer was patient with us while prepping for our hearing. She was flexible with her schedule and made us feel comfortable throughout the entire process. We get very high ratings with the folks that work with us on any of the unemployment issues when it comes to having to go to hearings, having to represent with them on any of the claims issues. So we're very proud of the folks that we work with Equifax on the claims hearings. Some of the trainings, there's hundreds of webinars and issues, and you can go in and do those on your own. So they're all there, they're all recorded. It's in the library. Setting yourself up for success to win a claims before it's filed, the life of a claim and determining liability, introduction to Case Builder. Everything is automated. It's there, it's touched there, it's there for you 24/7 to do when you want to do. We have an HR platform. It's called Mineral. We love Mineral. You have access to live HR folks. So if you have a question, you don't know what to do, you can call them up and you can ask them. And believe me, you can ask them any sort of question when it comes to an HR sort of issue. If you don't know what to do, if you have something that's happening right then and now, you can call them up and say, I have an issue. I need your help. I don't know if I should let somebody out the door right now. I don't know if I should just write them up. I don't know what to do. Can you help me? Or you can just type them a question and say, here's an issue. Can you help me? They will get back to you within 24 hours. Or there's a library of hundreds of curated questions that you can go in and ask, read those up. There's training courses. Like I said, there's hundreds of training courses that you can assign out one-on-one, or you can assign them out to the whole organization, depending upon what you want to do. If you want everybody to learn the same thing, you can assign that class out to everybody. There's federal and state level compliant handbook. So if something happens in the state of Pennsylvania and you need to change, if Pennsylvania comes out with a new rule or regulation, it won't, and you build a handbook with us, it won't allow you to update that handbook until you drop that new legislation into the handbook. So it keeps you compliant on every level once you build a handbook with us. So it's really good for that. And then it keeps you up to date. It keeps you a steady stream of breaking news, pops you up. You can sign up for legislative updates. Anything that you want it to keep you updated with, you sign up for how many emails you want to receive from them on a regular basis. So all of this is what you get with your services with us. So here's your dashboard. This is an example of the dashboard. So this is Illinois because we're an Illinois employer. So this is just an example of, the things that pop in, Illinois employer liable for gender related bias, data collection, federal law, E-Verify update. So it pops up and it says, here's what you need to know right now, right when it happens. And then here's just an example of, I took a course. This is the certificate. So when somebody takes a course, it actually prints out a certificate so that they have, an actual certificate if they want to hang it up, do whatever they want with it. But they do get a certificate of completion that they can show they actually took a course and I passed it. So just an example. So I said, if somebody signed up for that FMP Access program, if they have 30 employees or less, our FMP Access program is only $500 a year. So for a whole year, they get the services of our claims monitor, they get the HR platform, and they get everything else First Nonprofit has to offer. But the value of it is $250 is for the unemployment tax account. So that's for the claims monitoring. If they were to go to a hearing with us, the value of that is $225. A training course, one training course per employee is worth $125. The handbook itself has a value of $1,500. And then consultation with a live advisor is $250. So you just add that up. That's well beyond the $500 per year value. So you can see what we're offering is, well beyond $500 a year in what we have to offer. So, you can't get a better value for your money than what we're offering at this point. So with that, I'm just going to wrap it up with our enrollment timeline, because if any of you, and most of you said at the beginning in the poll that we did, that you're still in your state's unemployment tax system. And the one thing that's unique about the product that we offer is every state, if you're in the state unemployment tax system, gives you an enrollment deadline. And they say, great nonprofit, we give you a choice that we give no other employer, and that's that you can choose to come out of the state's unemployment system, and you can choose to just reimburse us when you have an unemployment claim, but you must choose to come out of the unemployment tax system only one time a year. And that's to come out to enroll effective January 1st. So in order to take advantage of one of First Nonprofit's programs, you would enroll effective January 1, 2025 with an enrollment date. And most of the enrollment dates, most of the deadlines to enroll would be November 30th of this year. So now is the perfect time for you to use one of our request for quote forms, and the link to that will be live on this page once we end. So you can do that, but you have to enroll by November 30th or December 1st. If you miss that deadline, you would have to wait until January 1 of 2026. And I think what's really great is VSA members receive an enrollment discount. So if you're not a member of VSA and you're listening to this webinar, now would be a great time to become a member of the VSA, because you get a distinct enrollment discount that we don't offer other folks. So that's a real good advantage to becoming and a member of Vision Serve Alliance, because we're going to give you a discount that we're not going to give you if you're not a member of Vision Serve Alliance. So I would definitely first become a member of Vision Serve Alliance, then fill out the request for savings evaluation, and then we'll take care of everything else. But remember that enrollment deadline is January 1. So we want to start looking at this now, and it doesn't take us long to do all of this. And again, there's no cost to do this, for us to take a look at this and come back and do this. So with that, I will open it up if anybody has any questions, and Cruz and I will take it away from there and answer any questions that you have.
No, and I did just pop in the link to our free evaluation request page in the chat
Yeah.
box.
Perfect.
But it is also included in the slides. So yeah, let us know if we can get that evaluation started for you. As Cheryl said, that right now is the perfect time with those November 30th deadlines coming up.
I've been watching the Q&A. I don't see any questions typed in there, but feel free to type in your questions, folks, if you have any questions. I was just curious, the size of nonprofits that you serve. It seems to me that having these HR experts that are at your beck and call whenever you need it would particularly help those of our smaller members who perhaps don't employ a separate HR specialist.
Yep, absolutely. Our F&P Access Plus program is perfect for smaller organizations. I recently enrolled someone that just had 2 employees. However, they were looking at bringing on more staff in other states. So not only are they taking advantage of the HR platform, but they're also, contacting me to find out, hey, what is the minimum to sign up for an account in California? So we're able to assist them, with the remote compliance side of things, as I said, the HR Mineral platform. And of course, in the event that they do have a claim, they would get access to the Unemployment Claims Administration. And like Cheryl said, just for $500.
That's another point you bring up, and that the fact that a lot of our nonprofit members are employing people remotely that are located in different states than where the nonprofit is located. Vision Serve Alliance is a really good example of this. Of course, we're incorporated in DC, but our corporate headquarters are located in Missouri, where I am. We used to have all of our employees here in Missouri, but now we have several people in Florida, and we have one person in Virginia, and we used to have another person in New York. So there's so much variety in the different state laws that you need to be knowledgeable about, and this seems like you all could help with that as well.
Yeah.
Very good, very good. Well, again, we thank you so much for that. Was so much helpful information. I learned a lot about the current legislation that is coming down the pike, which is going to affect a lot of us. And again, the recording of this webinar will be available very soon. We'll send it out to everybody who registered, and encourage anybody who is interested in learning more whether or not this program can benefit you in your current situation to fill out that free, no obligation savings evaluation. Talk to these experts and have them advise you, hey, looks like this program could really save you a lot of money. We've seen that time and time again with our members. And Cheryl and Cruz, we thank you so much for being here and for supporting our members, as well as you do thousands of other nonprofits across the United States. We really appreciate that. Oh, that brings me one last question. Do you work with Canadian nonprofits as well?
It's a different unemployment system. So no, it's by federal law, just US 501c3s can take advantage of this.
Got you. Yeah, we've got 2 Canadian members now, so they're always asking me about these questions about eligibility. So no problem. All right. Well, I think that's it. Any last questions or things you want to say, ladies?
No, we appreciate the opportunity to have this meeting. So we appreciate Vision Serve Alliance and all that you've done with First Nonprofit, and we look forward to talking with your members.